And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, August 22nd, 2021. Well, as Globex opens here in the US today, the markets are higher. And so now I just want to add that to our potential probability and what is going on in the markets. The overhang for this week seems to be centered around the Fed's Jackson Hole meetings, which will take place beginning on Thursday with the Fed Chair Jerome Powell making his comments, or his news conference is on the following Friday. So we may have a very slow market, or we may have a market that basically just reacts to what the pundits may or may not be saying with any reports that are coming out in advance of this meeting actually taking place. So what could that spell for the NASDAQ 100? Well, right now, under this particular count, we would be looking for the NASDAQ to go and make new highs. Now, I want to just show you the potential that the NASDAQ on a preferred count, I continue to have this labeled as the completion point for minute 5, minor 5, intermediate 5, primary 5, cycle 5. I've got them all stacked up, and that's where that ending point came. And then that still can allow, under that count, for a move up to new all-time highs. And now I'm going to show you under either count, we can now expect more than likely new all-time highs as all of this anticipation and waiting comes to a head by Friday. So first, under this particular count, we'd be looking for 5 waves up. And so we're sitting really just below where we're marked everything as the high, but the all-time high as at 15,172.25. So in any case, the NASDAQ needs to put in a 60 point, 70 point rally, and we're above that high. And that then puts some strength under this count, but actually either one is going to work. But it would just, we could leave that 4 right there and be looking for 1, 2, this would be a third, and maybe this third wave tops out somewhere in this particular area. And I actually can run around and change that to be more reflective on if this is the A or wave 1, then this would be, excuse me, wave 1 to wave 3. Whew, that took me a minute. But these particular Fibonacci's are for retracement levels if indeed this is a B wave. So, but under 1, 2, 3, our expectations would be at least to get up into this area, but then a 4 and a 5 to possibly take us much higher, up into these very lofty numbers. And those are the levels where minor wave 5 would be equal to minor wave 3, up at 15,543, 15,800. You can see it gets very lofty very quick. So if this rally really wants to kick off, and that Jackson Hole meeting somehow sends out such a positive, reassuring message to everything this country is confronting, well, then yeah, there could be quite the hop and a skip and a jump right up into these areas. I don't particularly see that, but it is a possibility. So more than likely what I see is that we keep the count, and this turns into a 3-wave structure, just as I've got it labeled, but instead of being a wave 4, it's just wave A of the starting phase of that major decline corrective pattern that we would be looking at. So if I left all the highs right here, and this then would be rallying in an B wave, and since we're so close to the beginning phases of that A wave, I can still count it, but it would be an irregular B wave. Then if it is an irregular B wave, then what happens under that scenario is that this C wave or the B wave, but right now this would be A, B, and it's in C, the C or the entire B wave would then come in at 1.382 times the length of wave A, or 1.236 or 1.382 with a max count out there at 1.618. So now here we are staring in the face, the exact same zone we have been working with all along. We continue to find resistance at 15,240, 15,300, 15,400. Those levels continue to come up no matter where we are starting from or what particular count we use. So under either count, this seems to be to me where this market, where everyone seems to want to take it and where it will finish everything. So whether we leave this as a 4 and this is a wave 5, or we leave it here and this is A and this is B, the ending result is going to be the same. And that is a turn and a crushing decline, taking all of it back very quickly. And that would come under either scenario that the market could possibly be tracing out right now. If I leave this as a 4, this would be a wave 5. What's coming next? The initial stages of that very large corrective phase. So we're going to get this, but now blow it up several notches. And that's how it was going to start. And even if it's an A, B, and we're looking for a crushing C wave, which would then be expected to bring this market down all the way back probably to 14,000 to start. I mean, we're looking at a crushing C wave. And in that being the case, I need to move out at least down to these levels, this 4, and then this 4. And ultimately, I would anticipate that this would end up out here. And that then on that very, very upper level is going to produce that A wave. Now, whether it's going to be A wave of this other cycle 4, or if it's going to be a 1, 2, 3, 4, 5 A wave, or if it's going to be an ABC A wave. So we still have a lot of going on. And so we have to give both sides. But the fact remains that now the market's kind of making it clear that A, they're not really going to start taking it down unless the pundits come out. But I wouldn't suspect that on the hourly chart, this is going to start coming back down to these levels. Unless indeed something comes out that says, no, whatever they're doing, bull. And this is what's going to happen. If this all turns from here and comes flipping down, then it's the same deal. I leave all the highs there. So regardless of which count that I'm going to use, we'll know. So we've got to cover to the upside, and it could stay as a 4, or still all the highs could be here. So that part doesn't change. What is important is, where is this all going to end? Well, now we're getting additional clues, additional information, and how the market wants to interpret that. And again, interpret it through algorithms that will fire and trigger, and we'll get that reaction. So, but we're going to get it, I think, in both directions. So either there's a possibility that this flies up, gets itself up close, but then flies up to new all-time highs on something that comes out just before, or whatever the reaction is going to be. But then there's going to be something else that's going to pull it and absolutely thrust it lower. That is my take based on the Elliott patterns and what they normally result in on the degree levels that we are completing. So I still would be looking for a shock to the market. And so they're all basing this wait and see stuff on, well, the Fed's going to let us know after this Jackson Hole meeting of what their intent is, if they're going to start cutting back, on buying back issues, or paring rates, and all, et cetera, et cetera. So again, we're sitting at the top of that food chain. So in other words, what sits at the top of any food chain? Interest rates. That's what sits at the top. And then what's below that? The dollar, because that's what it's going to affect. So we've got all this play coming in between, the top levels of the food chain. Then we've got, equities underneath that. You got bonds, you got equities, and how it all filters back on down through. But it all is sitting up looking, okay, that's what's at the top of the food chain. So we've gotten all the markets up there. Now that top of the food chain is going to let us know what's going to happen. So that's how you can also look at it. It's now down to interest rates. What's going to happen to those interest rates? Because that's what our next move is going to be. And that's where it's hedging. This is where I'm going to leave it. For tomorrow, I'm not looking for a whole lot. It could be really slow and very anticipatory, but we still have to consider that the money's moving in and out of the market, the hedge funds and other funds. So those first hour to 2 hours could be very good trading in both directions. So keep your very, very near-term hats on. Use your moving averages on your 1, 2, and 5 minute charts. Keep an eye on the hourly chart to see if we're coming into contact with any of the hourly moving averages. So that's going to help us to determine depth. And that's going to also help us to be more cognizant of how the market is now interpreting everything. So have good trading days tomorrow. And the next update will be on Monday, August 23rd.